Hello, mic test. Hello, mic test. Can you hear me? Okay, guys. So I have a continuation setup here, but I supposed to exit by now, but I don't want to because I want to give an example uh, of a continuation setup. All right. So this one here is an example of continuation setup, and this is our setup number one here. The setup number one. But I don't. It's I've, I saw this setup a while ago, but I don't trade by this time. It's because it's unreliable setup. But this is a perfect setup, by the way. So we have a bull run, and then switch of the trend. So we do have here where we cross the moving average line to EMA 21. That's our first signal, meaning we're about to sell. Then number two is the super trend shifted to support the bearish. That's number two. And then after that, we have the fantastic displacement here to there that created this market shift and leave fair value gap. Okay. So by this time, of course, you will not enter here because we did not yet fulfill the market shift structure. But if if you want to risk, you can enter right here on this fair value gap, but this fair value gap here, but it's not a high probability trade because we don't have a market shift, a real market shift, and I will not consider this a market shift. I can say yeah, it's a displaced candle, but it's not a high probable displacement. But this one is high probable displacement because created a true market shift. So if you can risk if you want to by entering here, but the the safest entry here is this one, and your stop loss there. Yep, because this one here is in volume imbalance, and we can consider that as a fair value gap, um, even though it's not really fair value gap, but this is a volume imbalance which is can be as good as fair value gap. For me, it's better than fair value gap because volume imbalance where the price will always retest or feel that, not retest, but feel that gap before moving to the direction. So this will be my entry if I want to trade this one, and then I'll say I target 1 is to 2, or I will say since I will catch the trend, I'll catch the trend, and then I will be exiting once I have the exit option A, which is the crossing of the moving average 9 to a smooth moving average 10. So this we're here. So if if you want to follow that exit, so you have at least 1 is to 4.3 risk to reward ratio, and then you're out. Market is starting to consolidate, and we're not trading during consolidation, so that's the purpose of the exit option A to D, is to avoid consolidation by following the exit, especially the exit A. Actually, this is an exit B because exit A is 1 is to 2. This is an exit yeah, an exit B where the moving average 9 crossed the smooth moving average uh, 10. Now we have a consolidation, and then we have a breakup structure uh, mom Supertrend momentarily like switch to bull, but it's consolidating, and then after that we have a displacement. We have a displacement, late displacement. So the shifting of we have another like crossing of moving average 21 and exponential moving average 21 and moving average 9, and then shifted of super trend, and then we have a displacement. So this is an example, classic example of continuation setup. A continuation setup is more, it's risky than the real setup. But as you can see, we fulfill all of the criteria to enter the trade like what we have on that setup. The only difference is we are not looking for a market shift, but we're looking for breakup structure, and we're looking for the same entry, the fair value gap on the 50%. So here I enter the trade perfectly. I supposed to, you see this, exit A. I supposed to exit here, but I did not follow that. This is an exit B because I supposed to exit there, but I did not follow. And I'll tell you the reason for that. And then after that, I fulfill another exit there, exit C, which is the crossing of the moving average 9 to exponential moving average 21. So why I did not exit? Because I mentioned earlier on my previous video, like earlier in the afternoon session, that if I see the the super trend like this, it's not a consolidation, it's a trend down. So like it's trending down, continuously supporting the bear momentum. So I don't see the reason, or I don't see any reason that the market will shift. Aside from that, it's a low volume market, even though we have this a brief displacement here, but it's a low volume, and it's not manipulated. It's not caused by institutional trade. Rather, it's just like a retail traders wants to buy on this level because yeah, on this level. So I'm not confident because it's not a psychological number. It's not, yeah, it's not an even number. So I I don't see any reason. So that's how you assess it. So that's why I keep the trade, and then I keep my stop loss because I'm confident that the market will not displace, or will not shift by this time. So that's why I'm keeping it. And aside from that, I hold it because Asia opening is 2000, and we're like, I want to see the movement. So uh, it's considered risky because sometimes once the market open here, sometimes you will not see this move. Rather, you will see like a movement to the upside. But maybe because if you go here, we can see some. What time is there? What time? Today is 21. You see, we don't have economic data. We don't have a big impact. So this is a sell out. So I don't see any reason that the price will like shoot up of any reason of manipulation or anything. So this is just an emotional trader that they're trying to push the price up because it's about to open. Asia market is about to open. So all of them get stopped and swallowed by. So they are part of the liquidity now, swallowed by the market. You see, and then I don't see any liquidity grab on this. That's why I don't trust liquidity, because I don't see any liquidity. Maybe ICT will consider this a liquidity here, but I don't think so. This is more on sell out or order to sell on this level. People order there, and they said once the Asia market will open, they automatically sell. It's like a order, pre-market order. So that's how it is. Mm, good trade, right? Perfect. You very nice trade, Max Steel. Nice steel. Nice trade. So you see, I'm not putting my emotion. I don't add any analysis on it. I'm not looking at the 15 minutes time frame. I'm not looking at 5 minutes time frame. I'm just focusing on 1 minute time frame, and the moving average and my indicators and my strategy. I'm not trying to like analyze the market uh, because I know uh, analysis is always it's not reliable. Although you can predict all you want, but the market is unreliable. You will never know unless you see. So that's why I love moving average because it's more on point. I really don't know why people are like, we don't need to make trading harder. We can make it easier, like by this. So if I hit my stop loss there, then okay. But trade is not 100% always like right. But if you have a strategy that gives you like a 90% winning rate, why not follow it? Like trade it like a robot, trade like a robot, and just follow it. Like trade like a algo. So that's what I'm doing. Like I'm just following these moving averages, uh, my steps, the 1, 2, 3, 4. I have like 5 steps on this trading. So I'm just following that. So right now we have this one here. So this move here, let me see. Um, if you were late, like for example, if you were late, actually, if you are late, like you did not enter this trade, uh, I will not consider this a good fair value gap, this one here, because the moment that the price will retest this area here, the moment that the price by this, for example, by this time price will go back there, we will see some crossing of the moving averages and switch of the super trend, and that is an indication that we're going to buy. So we don't have, this is a void, an example of a void on a low volume, like a slow market. A void is where it's not a fair value gap, but it's more on inactivity and caused by this sell out. So this sell out, this is this gap here, this inefficiency candle here. This is a big trader like smart money or hedge fund like bank maybe. So this is not a retail trader. A retail traders are this one here, the small candle. So that's how you I don't know. Just that's how you analyze the like the price action. So I've learned price action mainly by watching ICT. So most of my terminologies is from ICT. I don't have any aside from the candlestick pattern, support and resistance trend line. I have none. I can read price action based on what I've learned from the methodology of ICT. But I'm not an ICT trader. I was, and now I still have like how many? $5 to pass this account. Let's switch to micro. Okay. Oh my god. Well, let's sell something. Oh, let's add 10. Oh, am I liquidated? Do nothing. Okay. So 20. All right. So C profit 20. Stop loss of 100. Okay. I'm just trying to pass this one. Okay, so I hit my I hit my take profit, but it's short. $4 short to pass the account. To pass this account. So let's see. I'll not enter this trade. So what happened here? I think we reached the level where the price will reverse. So let's observe. So yep, this is an example of a continuation trade. And the continuation trade that I have like how put my stop loss there earlier. So you see, uh, I risk only 119 or 120, more or less 160. I forgot. Oh yeah, 160, and earn like gain 854. So I'm telling you, all of my trades, like all of what I'm showing here, I'm not trying to impress anyone. I'm just following this strategy, and I'm just sharing this strategy to those who wants to pass their account or having hard time having hard time passing their account, or having hard time uh, being profitable as a trader. So follow this one. All of my, yeah, I show you my losses earlier when I was trading. On all my lives, I'm not hiding anything. So I'm just following this strategy like a robot. And now you see, I have 800 within less, like I think less than 30 minutes. Less than 30 minutes. I have like 800 within, yeah, within less than R. I say less than R. Let's say this one. Let's trade this one, and done with this. Oh, I think I will lost this. Anyway, it's all right. Let's so that I have more to trade late tomorrow. Okay, so this will be like a, we have a brief consolidation here. I think the price will still continue. We have a fair value gap here. So this is a very good fair value gap. I think this is high probable fair value gap, but I'm afraid of this candle, this one here. So let's wait for another candle. If we have another candle that engulfs all of this, so it's a confirmed reversal pattern. If we have a candle that will close over here, that three candle is a basic reversal candle pattern, right? So let's wait for that. I'll put my stop loss here, because once the candle will reach that one, it's a confirm, maybe confirm consolidation or confirms reversal or retest of this void here, or yeah. So let's see. All right, so I don't want yeah, I didn't expect that I'll have this move. Actually, it's Monday, right? And I'm expecting a bad market of this Asia. That's why I plan to live. I plan to have this Monday, because I want a bad market, like a consolidation with a narrow range, so that I can explain to you which one is to avoid, and I can explain to you the weakness of this strategy. But you know, market is always give surprise us, although we have a good market tonight uh, because of this. So maybe someone moved the market, but I'm trying to, actually I'm really trying to, I'm really hoping that the market is bad today, just to show you what is an example of untradable consolidation. So we'll see. Maybe I will try to, I think I'll stay for another 30 minutes. Maybe we'll see some bad consolidation. Example of bad consolidation, actually we have here, like for example this one here, but I cannot say this is bad consolidation, because we have this move earlier and we have this move earlier. So you see this one here. I was hoping that the market, this one here, that's why I entered the market earlier, because I was hoping that it will be a bad consolidation today, because it's Monday. I'm not expecting that we will have this one. I was expecting to, you know, to lose this trade, so that I can prove that this, like an example, I can give an example that even though there is a good setup, it's still untradable because of the consolidation and the range and the movement. Yep. So if you notice, if you've been trading for long, if you notice, mark the Japanese candlestick pattern is like the picture of candlestick pattern are almost like repetitive. It's algorithmic, and the only reason why candlestick like trend, it's because of the trader, because of the traders, because of the manipulation. But if no one is moving the market, you will see like this. This is an example of, you will see like this move. you will see this move. If no one is moving, you will see this move here. Like no one is moving the market right now. So like this, see, no one is moving the market right now. So it's an algorithm that even though no one is moving the market, the candlestick will show like this. Now I passed the look at that. While talking, I passed the combined. So while doing this, you see, uh, you will see you'll see a move like this, and all of a sudden we'll fill that fair value gap. We'll start to consolidate, and then we have another like a movement. We'll go back again, consolidate again, movement. You see this? This is a basic regular pattern, and if you draw your super trend, will show like this, like that. So that's an algorithmic move. So now Asia pre-opening range, after this algorithmic move, starting to move down because someone is selling, someone is trading. So that's why we're seeing like this. But it's still, even though someone is moving the market, the algorithmic feature is still there. You have the displacement, you have the consolidation, you have the you have consolidation, you have the manipulation, and then you have the distribution. So market will always show displacement, market shape or breakup structure, fair value gap, will always show like that. So that's the only thing you need to learn is where is the displaced candle? Is the displaced candle created market shape or breakup structure? Is the displaced candle leave a fair value gap? Because if you master that, you now know where or when to enter the market. And as a trader, our main problem is how, when, and where to enter the market. That's our main problem. If you don't know what to do or how to enter the market, so you will blow your account. So once you master where, when to enter the market, then you will be a good trader. So and in order to do that, I only know this. I only have one strategy to enter the market, and that is I will enter on the fair value gap. Fair value gap, most often than not, is always be tested. So the first thing you need to have for your entry is, I will close everything, okay? I'll remove everything. Like for example here, okay, let's this one is not it's a consider a void. So let's see how about this one. Let's see here. So the only thing you need to know is a displacement, and I'll give you, if I go this one, we can enter this market if you go to 30 seconds. I'll show you. You see, so if you go to 30 seconds, you have, and if you go to 15 seconds, you will have a good entry. You see, that's why. Okay, on a 15 seconds, because if you can still enter a void, just go to the lower time frame. And like for example, this one here, we have this displaced candle, one big displacement candle, which is caused by maybe institutional trade. This one, although this is a void because it's so long, let's see. We'll give it it's still a fair value gap. So let's go to 30 seconds. But it's not a high probable fair value gap. So if you see a displaced candle this long, don't put your entry on the 50%, because even though that's an optimum entry, this is not a high probability gap because it's a void. So what you can do is you can put your entry on the base of the fair value gap if you see that one. So you see, you have this displace created a market shift. This is the only thing you need to know to perfect your entry. So you have the market shift, right? And you have this displaced candle created market shift and leave fair value gap. So now you already fulfill your entry. You already know where to enter a trade. So even though you're not following this strategy, by just following your instinct, okay, I think the market is going down. As you can see, if you are like, if you want, you can like trade like trend line traders. Just use the basic trading strategy as possible. You don't need to be fancy. You don't need to learn volume imbalance, CB, whatever it is, liquidity, something like that. You don't need that. You don't need that. It will make your head. You'll have a headache learning that thing. So basic. Okay, we're trending down. Trend lines going down. Like you don't need to put, even you don't need a draw, you don't need to draw to see that the market is trending down, and then all of a sudden you have this one. Now you have a market like a breakup structure. This is not a market shape, like a breakup structure, because the market shape was happening earlier. So you have breakup structure, and now you have a fair value gap, and then say, okay, this fair value gap is like, it's look like void, which goes too long. We have a low volume. We are in Asia, and this is uh, institutional trade or manipulation. So put your, now you know now where to enter. You put your entry here. So after this market, 1, 2, 3, fair value gap, the third candle, enter there. You're not risking a lot if you put your stop loss there. Maybe you're just risking 150 or something, and then now you enter the market. Once you enter the market, go back to 1 minute to leverage the exit option. So once you enter the market right now, so you already have 1:2. You will have 1:2 instant 1:2 after that. Now, because you want to catch a trend, so you're hoping to have. So by now, you're supposed to exit the entry by the trade by now, because you have the option D would happen first, which is the shift of this super trend. But you can, so you have 1.2. So that's how I don't know. That's how you use this strategy. And the most important of this strategy, I'm emphasizing this most time every time I'm trading, is the exit option, because I put on I put on the description. Once you follow the exit option, A to D, you have a chance of not having a loss, or you have a chance of minimizing your loss to almost maybe none. Maybe you will like exit, you will have a profitable exit. And I show that time and again and again on my trading, that I exit many times because I'm not confident of the trade. So yeah, so this is how you use this strategy. Uh, so my high chakra dar, my indicator is on the description, but it's on the screen. Moving average 9 with smooth moving average 10, super trend length 14, factor 3, and then exponential moving average 21. So that's the only indicator that I'm using. It's a free indicator. All of the chart, it's available on all of the trading platform. Nothing fancy about this strategy. Nothing complicated about this strategy. And I did not invent this one. I did not, like, it's been there waiting for us to discover. So that's why I'm sharing this to you, because it's not mine. So I'll give back to you. This is ours. So if you see some, if you need, if you backtest this one and you notice that we need to add something on it, or there's need to be improved, maybe we can reach 100% winning, like we can use this strategy without losing any. So tell me, and let's backtest it, and we'll see. So right now, this is the strategy that I'm giving to you right now. Backtest it. I don't do mentorship because I think it's 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 cheating. It's cheating. Like, why will I do mentorship for free? I mean, my YouTube channel is already mentorship, but I don't ask for fee. If you want to ask a if you want to send me privately, yeah, I can reply if I have a time. But I don't mentor with fee. I don't need your fee. So this is my way of giving back. Uh, it is proven based on my experience that this strategy is works well and give me profit, uh, give me more that I can ask for. Yeah, so I will share it to you. I don't care. Maybe if we master this, a lot of us master this one, then we'll able to get more from the prop firm or from the broker. I don't care, but yeah, um, I've been to like I don't want those trader experience. Uh, what I have experienced like when I was a new trader, I went to some depression. I lost a lot of money. I enrolled many educational I subscribed to a mentor on YouTube. I paid a lot just to learn, and then at the end, I am still not profitable. I don't know, so I went back to basic. I went back to support and resistance trend line, and then now I found this moving averages. I have another moving averages that maybe you know. It's on the YouTube actually. You know the bald guy that his YouTube channel is moving averages. So it's where I get the idea. So he's teaching something about moving averages, but it's not like this. I think you will see some setup once or three times a day. He's using another confluence, which is the moving average 200 for global trend, and I cannot do that. A global trend because it will limit you to have it will limit you to have a setup because you need to wait for the moving average 200 to another moving average to cross that moving average. So this one, we're not looking any other time frame, just 1 minute time frame. Just back test and you will see. So this is, guys, this is free. I don't see any reason for you to not to try this one because yeah, uh, this is not mine. Maybe I discovered maybe because it's been there, but I did not invent this strategy. It's been there. I just back tested it like for 6 months, and yeah, I told you I don't want you to go through through that experience. It's really hard. Like I feel like I was addicted. I lost a lot of money, and I cannot eat. I keep on thinking of trading. I cannot work properly. So now that I found this one and like able to leverage from this strategy, and now I'm sharing it to you guys. Go ahead and uh, yeah. So yep, I broke not before 9 p.m. No, before 7:30 or 8 p.m. So 9 p.m. is 9 p.m. is I don't I told before that I will not trade before 8 p.m. But I will change that rules. I will not trade before 7:30 p.m. because 7:30 p.m. is the pre-range market of opening Asia opening, which is 8 p.m. 8 p.m. is the opening market. Then I will stop trading after 9:30. So I only have an hour window to trade Asia, and after that I will not be trading. Yep. Uh, I'm still working on making the Discord, but I really don't know how to use Discord. I'm trying to study, but I'm explaining everything here in the YouTube. Do you think I need a Discord? I want to explain everything here in the YouTube so that new traders or everybody will see this and will you know just trying to help. And I don't need subscription fee or whatever because I'm earning enough with these strategies. Unless they will change, unless something will happen that this strategy will not work, then we will look for another. We will try to discover another strategy again, and then I will share it to you guys. So as long as this strategy is making me profitable, so I will share it to you, and I will continue using this one. Okay, so back to this one here. Now I'm done trading because I don't have an account to show you. But I think I will go to the trading view and I will use my my Tradobate account, but I will not trade. Yeah, also maybe I will use the paper trading. So let's go to the trading view, and I will explain more. I will explain again this is strategy for you to familiarize familiar familiarize with it. Okay, okay, let's have another 20 minutes, and after that I'm done. I need to, I need to take care of my kids. All right. I'll go, let's go here. This is my trading view. This is my trading view. Yeah, this is my trading. Okay. Thank you so much. So we're in the trading view. Let's go to the NASDAQ. Uh, I think let's switch to gold. Let's try gold for now. So I'm always using, and then we will play. Let's do a replay trading, okay? So of the New York, New York opening AM. Okay, let's have that one. And let's okay, let's have this one. All right, so we're here. We're on 1 minute time frame. We're not looking at the the global time frame. We were focusing on the uh, 1 minute time frame. So now uh, Asia, New York AM will open at 9:30 Eastern Standard Time. So 9:30, before 9:30 we are not trading. I usually open my chart at 9 because of this pre-opening range, 30 minutes from the opening range. All right. So this one here. Uh, this is our pre-opening range. Pre-opening range. I don't. I really don't want to explain gold because gold is it's not a stock. I'll go to NQ. Sorry. Yeah, let's learn stuff. Let's learn this one. Sorry, guys. Let's learn. Where are we? Okay. So okay, 9:30. Here we are. 9:30. Because you can apply. Actually, it's so easy to apply this strategy on gold market. It's super easy. But I like Nasdaq better. I like Nasdaq better. Okay. Wait, kid. Okay. Opening market. This is where the market opens, 9:30, and we have this range here, pre-opening range. Okay, at 9. All right. So you wake up. You woke up. You see this one. We have a trending market caused by retail traders from here. And this is an okay, good one. This is an example of non-tradable consolidation. If you see this, don't trade. Avoid trading this one. Now you are here and you see this. It's trending up. Right? It's trending up. And then you will start hunting setup after 9:30. But be mindful of the news event. If there's a news event, don't trade. Just don't trade. And we have this one. All of a sudden you have that one. Actually, I traded this earlier. All of a sudden you have this one, okay? So this is not a high volume. So I will consider this a fair value gap. It's not a high volume. Okay. Now, the setup started here. Setup started here of this cross. Where is it? Why am I? It's not complete. Why? Supertrend. I don't have the moving average 21. Okay, there it is. Yeah. So the setup started here. This is where the cross. Trending market continues to trending. We have an exit option one here. Exit option again here. Then a continuation. You see the blue line switch back, cross back to the red line. and then we have this one. So this is this is not a continuation setup. This is just a trade that started from here. But because of this candle here, this what you call it, inefficiency candle here that leave this one, and although it didn't create any, oh no, it created a global market shift from 15 minutes time frame. This is from 15 minutes time frame. It's easy to, if you go to 15 minutes or 10 minutes, you go to 15 minutes. Yep, it's a 15 minutes market shift. So you don't need to go there to know because it's obvious. Okay, this is a market shift, 15 market shift. It's on 15 minutes, so it's a global market shift and created this very good inefficiency, and then because of this candle, it makes this fair value gap a high probable fair value gap. And then after that, if I'm well, you can enter this one. This is the best entry that you can have. Let's have this. I will enter this no matter what if I'm trading this one, and I will this first candle. Let's see there. So you see how much you're risking. You're only risking on this high volume. You're only risking 435, and my tolerance actually on the high volume. I don't trade mini on this time frame or in this session because of the high volume and volatility. So I use micro, 5 micro, 4 micro, 3 micro, and then you have a chance to add more. But if you're just using mini, look at that. You're risking that with this good move, and then you can target 1,000 for 1:2 or 1,000, and you will have this in no time. There. So once you have this move, this is the time that you need to be greedy. And what I mean by you need to be greedy, it doesn't mean that you add more, just scale. And once you have that, it's still not safe to put your stop loss there. It's still not safe. Wait for a displacement, a breakup structure before you move your stop loss. There. So we have a breakup structure, and then we are too far from crossing the red line, so we're still safe. That's the time you put your stop loss here. So where you put your stop loss on this first candle, because you are protected by this fair value gap. Okay. Now, if I see this, I will aim for more. I'll go to 5, then continue to go. Now we have another displacement that created fair value gap. This is what I mean of a chance of catching a trend if you follow like for example, you don't want to follow the 1:2. You want to be greedy, and you are greedy, but you still like safely, you're greedy, but it's on a safe side. So now you have that, and this is the time I'll put my stop loss there. So now you don't have a worry. Now you're winning. Like whatever happened, you have 800. And then you're still waiting. You're okay. Now I have another breakup structure, and leave a fair value gap. I will be more greedy. I'll put my take profit there, and then I'll put my stop loss here. Now you have 1,300, and this trading strategy is super chill that you don't need to worry once you are on this level, and then you are guided by your exit option. Okay, now if I see that one, have you seen that one? If I see this one, still, you see, if I see this shift of super trend, that's the time you exit. But let's assume that we did not hit that stop loss. So we put your stop loss here, like for example, we put it there. You did not move it. Take profit is still there. So once you see that a shift, this is option D. Option D is either the super trend switch or the blue will cross the green line. But right now we fulfill two exit criteria, which is the super trend shift of super trend, and the crossing of the moving average 9 to smooth moving average 10. So I will exit that entry. So give me two options, so I will not be like, I stop being greedy. I have 1,300 now. Now you are observing the market because we are inside the most important time of the New York session, which is the silver bullet, 10 a.m. to 11 a.m. This is my most important time, which makes me, I hope, makes me millionaire soon. Okay, like $1 million. Now, okay. Now what we have here, we fulfill all the criteria to enter the market for a short. You have the crossing, first signal is the crossing of the moving average 9 to the exponential moving average 21, shifting of this super trend, and we have a multiple fair value gap. Multiple fair value gap. You have one here, one. We have another here, two. And then we have a small here. See this one here? So I'll consider that like that. Now, uh, you are confused because you don't know, you have a two fair value gap and you don't know where to enter or where to put your entry. So that's confusing, right? It's so simple. Don't make it complicated. Draw your Fibonacci, uh, and then take that two fair value gap inside and put your entry on the 50%. So this is the optimum entry. You put it there. Stop loss is on the first candle, and then aim for more, like that. So go ahead, try that one. Okay, so slow. So supposed to be that one, but if you weren't able to catch that one, don't chase this move. It's already far, so you already have. So usually that's the best entry, but if you cannot catch it, like the price did not retest that, did not even retest this fair value gap here, it's okay. Forget about it. Forget about. That's fine. But there's another way to, but it's riskier, and I don't do this most often. Sometimes you see after the displacement, I'll show you. After the displacement, because this entry here actually I'm wrong. This one here is not the fair value, the real fair value gap, like best fair value gap is after the displacement. So the displacement candle is here, this one here until there. So yep, and then your fair value gap should be here. Yeah, it's over there. You see that one? That's the perfect fair value gap. Actually, I traded this one earlier and I earned a lot. That is a fair value gap. So uh, on a high volume, if you won't see any fair value gap after the displacement, go back to 30 seconds or go back to 15 seconds on a high volume. You don't do that on Asia because you will not see any. So you see there, that's the best fair value gap they have. Okay, so you have this displacement, major displacement and minor market shift and major market shift, fair value gap. I will enter the trade. No, actually I trade this one earlier, and this is where I just that's like that. Uh-huh. And now you're waiting for your option to exit. Let's see how much we will have. Exit. Once you fulfill that exit, Sorry. There. That's your exit. That's cross. So within an hour, less than an hour, like 9:30 to 11, like almost 2 hours, you have $3,000. So I trade this one earlier with one position here and two position here. I re-enter on this area here, this one here. I re-enter, and I have like almost 5,000, almost 6,000 profit earlier. So that's how you use. So by using this strategy, you have a chance to ride two movement, maybe three. You can trade this one if you want here. You see, after consolidation, this is a continuation setup, but I don't trade after 11. But earlier, I enter the market again at our afternoon. I have a live. Although it's a bad market, it's a consolidation market, and I was able to have at least like 290 on that live account. So that's how you use this strategy. Yep. Let's see. Any question? Uh, yeah. Please back test the strategy and tell me if we need uh, buy. What do you mean buy for what? Sorry.